In Kenya, we have different unit trust providers. This includes CAC, we have SCA Lion, we have Stanlib, we have Sanlam, we have Britam, we have Whole Mutual, yeah, among other unit trust providers. Unit trust fund allows investors to pool money together and invest in diversified portfolio of securities. Now, unit trust is regulated by CMA, that is the Capital Market Authority. We also have different unit trust options. Number one is the money market fund. We also have the equity fund, the balance fund, and the bond fund. Yeah. So the money market fund is a low risk kind of an investment, and the return is usually between 7 to 11% depending on the unit trust provider. When you invest in money market fund, the money that you deposit or the money that is pulled together is usually invested in the treasury bills or the commercial paper. So now when you invest in money market fund, you will be investing indirectly to treasury bills but through the money market fund. Now, when you're making this kind of an investment, it is good to be aware that the higher the risk, the higher the return, and the lower the risk, the lower the return. Yeah, that is the rule. Yeah. So now, what you need to open a money market fund account is number one, your KRA PIN, number two, your ID, copy of your ID, number three, a passport photo, number four, a copy of your bank statement. Yeah. Now, the bank statement is for the unit trust provider to see or to be aware of your bank account and the bank name and your account number. When you would like to withdraw your money from the money market fund, they will be depositing to that particular bank account that you provide in to them. Yeah. So now that is why it is important for them to see a copy of your bank statement so that they can get your details right. Yeah. You all know money matters, you know. The reasons why you should invest in money market fund is number one, if you have a low risk appetite or you are a risk averse kind of a person like me here, then money market fund will be a very, very good way to invest your money. Number two is you will earn interest. Yeah, that is between 7 to 11% depending on the unit trust provider, and that is a higher interest than what we get from fixing our money at the bank. Yeah, because when you invest in money market fund, then you will earn compound interest, unlike when you fix your money at the bank where you will only earn a simple interest. Now, what I mean with compound interest is that the interest that you earn daily on the money market fund account is usually compounded monthly. Yeah, unlike on the bank when you fix your money at the bank. So that is another advantage of investing in money market fund. Number three is you can the liquidity. I know, yes, I know you can withdraw your money from the bank whenever you want to, but you know when an emergency when an emergency comes up and then you would fix your money at the bank, maybe they may charge you for that transaction, but you will not be charged when you withdraw your money at the money market fund, and you'll get your money within 2 to 4 days. And you know, there are people, the unit trust provider is just people managing the fund. It's just that the money is being managed by professional fund managers. They are people so they can listen to you. If you have an emergency and you would like to withdraw the money, then it is also possible to get that money within the same day. Recently, I had an emergency where I contacted my unit trust provider and I was able to get that money within the same day. Yeah. Also, the money market fund is also good when you want to save, like in a group. Yeah. You will need several signatories. The people will be signing whenever you want to withdraw your money, and also it will keep you on toes. Yeah. For a long time you can save up in a group, or if you have a very, very good discipline, then you can save up alone. And mostly if you have a goal that is motivating you to save up that money. Yeah, if you have maybe you want to save up for capital, you want to save up to go back to school, you want to save up to buy an asset, you want to save up to buy land, yeah, which is an asset, or even for any kind of an investment, or you want to save up so that you can get that money and invest maybe in treasury bonds. Yeah, so that is a very good way of saving up money. Now, the other advantage is that unit trust is usually regulated by capital market authority. So now when you're investing in unit trust, then you know your money is secure because your interests have been protected by a regulator, which is the CMA. So investing in unit trust is a popular way to grow your wealth over a long term. Yeah, but there are several factors that you should consider before investing in unit trust. Number one is the performance history of the unit trust. So unit trust performance are usually published every day on the business daily, so you can start checking on the performance of the unit trust that you'd like to invest with here. That is the interest rate that they have been offering to their clients. Yeah. So here is an extract from the Business Daily. As you can see, we have list of different unit trust providers, which are like CAC, Cooperative, Cyton, yeah, and the interest that you will earn if you invest in their money market fund. These are published every day on the Business Daily. The other thing that you should check is the track record of the particular unit trust provider that you'd like to invest with. Yeah, there are some unit trust providers that have had issues, so it's very good to do a research of the unit trust provider that you'd like to invest with before making that investment. Number three is if the unit trust is regulated by CMA. So in Kenya, CMA, that is the Capital Market Authority, is the regulator, and it protects the interests of the investors. The other thing that you should check is your risk tolerance. Yeah, we all have different kind of risk appetite. Yeah, there are some people who have a low risk appetite, while the other people who have a very high risk appetite. Yeah, so before investing in unit trust, yeah, because we have several unit trust investment options, as I mentioned before. That is the money market fund, we have the bond fund, we have the balance fund, we have the equity fund. Yeah, so the money market fund and the bond fund are less risky compared to the equity fund and also the balance fund, where the risk is spread. The other factor that you should consider is your objective, the reason why you are making this kind of an investment. Now, unit trust investments works best for long-term kind of investments.